First up, the risks to the economy are greater than what's being anticipated in relation to the rand's depreciation. That's what Prescient Investment Management is thinking. With ratings agencies waiting to downgrade South Africa, there is a possibility the country will become ineligible for inclusion in a number of indices, and this could reverse the strong flows the country has enjoyed that have compensated for the trade deficit to this point. JP du Plessis joins us from Cape Town to share his views. JP, always a pleasure. Well, we saw 1036 being touched earlier in the trading session today, and it looks as though the direction is clearly in a negative one. Where do you think we are going to end up? I don't want to give you, I know you don't forecast, but is the trend weaker at this point? Can it possibly be weaker?
Look, I think there's always the temptation to have anchored expectations, and we've seen a big move in the rand weaker over the last 2 years or so. So I think the temptation always is to say, oh, how much weaker can it get? But there's still a lot of risks to the rand. You touched a little bit on what's been going on in the bond market. We've seen a pretty significant sell-off in the bond market. But what we've seen is something in the region of 7 to 8 billion rands worth of outflows, foreigners selling our bonds and repatriating the money. But that's still a very small percentage of the flows that we've seen in the 80 to 90 billion over the last 2 years, a year over the last 2 years. So, 8 billion versus 80 to 90 for the last 2 years each year is still a relatively small sell. So we think there's a lot of pressure there. If you look at the ability for us in terms of our ability to pay foreigners, our foreign reserve balances are pretty low when you compare them to the amount of assets that foreigners own. And the safety valve there really is the rand. So, if foreigners decide en masse to sell, we have seen a degree of that, but we haven't seen a real floodgates. That could turn into further weakness for the rand.
JP, just to come in here, I know that obviously the fixed income and analysts and strategists like yourself study the government finances probably in more detail than anyone else. Just give us your view, and we know it takes a long time to turn the state of a government's finances around. So we know that Pravin Gordhan has indicated he is prepared to borrow more money to get the economy going at this point. And bearing in mind that we're going into an election next year, what do you see how do you see the shape of public finances, the government public finances, changing over the next 3 years?
Well, it's an excellent question, Warren. I mean, what we've seen over the last couple of years is that to some degree, we've been rescued by the foreign flows into our economy. So whereas we've been issuing large amounts of bonds, we haven't really been held to account in terms of the price that we've had to pay for those bonds in terms of interest payments, because we've seen very, very strong demand for our bonds, and that's kept a lid on yields and kept a lid on the real cost of borrowing. What we could see going forward is that we're certainly going to see that issuance levels remain the same, but if we don't see the appetite from foreigners for buying our securities, then what we will see is an increase, and we've seen over the last month or so a quite dramatic increase in bond yields. And that's really saying we don't like the direction that we're going in, and this issuance is going to struggle to be absorbed by investors. And we're going to need to see local investors who, I get a sense, require substantially higher returns in order to invest in the bond market. So I guess the general picture is that spending is not about to slow down, and we've been perhaps a little bit lax. We haven't been held to account for the large amounts of spending that we have been doing because yields have been so low, and there's been the search for yield globally. But if we start to see that reverse, yes.
I was just jumping in there to say how much of this is to do with South Africa Incorporated and the very bad investor relations situation we find ourselves in at the moment, and how much has to do with emerging market contagion. I was listening to a show on 702 earlier today where we had a currency analyst saying the Brazilian real is the worst performing emerging market currency over this period. We are, of course, in that emerging market group, and the commodity currencies have that additional pressure right now?
You know, that's an excellent question. I think there's two things going on. I think there is the sort of idiosyncratic South Africa Inc. story, and there's a lot of reasons why one should be a little bit cautious about the direction that South Africa is going in comparison to our peers. And there's also the story that if global liquidity is withdrawn and we start to see an easing of the pace of quantitative easing that we're seeing in the US, that that liquidity has leaked into the emerging market world. It's gone into commodities. It's gone into economies like ourselves. I've talked about the search for yield. So, we've benefited as a result of that excess liquidity around the world. If the expectation is that excess liquidity is going to be removed, then that won't bode well for the emerging market. So, part of the story is South Africa. Part of the story is this kind of worry about the fact that excess liquidity may be coming to an end at some point, and the impact that that's going to have on economies like ourselves, emerging market economies, and also commodity-intensive economies like ourselves.
JP, just to come back to that question, you talk about in this note the ratings agencies downgrading South Africa, and then obviously there's the risk that we fall out of some of these indices like the WIGB, etc., which has been the source of many funds coming into the country. But are there any hard and fast rules around when the ratings agencies might pull the trigger in terms of when our debt to GDP levels get above a certain level, say it's 70%, 80%, I'm not sure exactly where we stand at the moment. What would you be looking at to see in terms of the triggers that would lead some of these ratings agencies to downgrade us?
And just to add there, the rating agencies seem very concerned about policy stability, and that is the underpin for any decision going forward.
Well, to answer your question, I think the rating agencies don't have a particular point in terms of debt to GDP. Our debt to GDP levels are still relatively low and under control. I think what they're concerned about is the direction of policy going forward. And I guess the silver lining to this cloud, and one doesn't want to be too doom and gloom, is that we haven't got ourselves into a situation where we're in a hole that we're trying to dig ourselves out of. What the rating agencies are saying is we're worried about where you're going to head in the future, and if the path that you're currently on continues, then we may need to take action. And it's more about the path that we're on and where that will lead us, rather than our sort of static situation as where we are today. So the silver lining really is that we can look at the situation. If this gives a bit of a jolt to policymakers, they are in a position to say, look, we actually need to start thinking about how we address the situation.
JP, if we had to ask you for three things that you'd do to solve the problem if you were advising Pravin Gordhan, what would those key points be in terms of getting us on the right track with the ratings agencies and getting just a generally better direction with the state of our public finances at the moment?
Well, I mean, far be it from me to be advising Pravin, but I think that there's a couple of things which, quite obviously are worrying, rating agencies as well as international investors. I mean, clearly labour market disputes and the continuation of those is an issue. It's not only an issue on terms of our production, etc. today, but it's also an issue as regards to our competitiveness and our ability to attract foreign investment going forward. And foreign investors now sitting in London or New York or wherever they happen to sit, if they're thinking about building a mine around the world, there's lots of countries where they can go and build those mines. And if you've got a situation where you've got labor disputes and labor unrest, that just will put them off investing in South Africa. I think we also need to be careful about the path that our spending is going on in terms of social programs, making sure that we can really afford them in the long run. These things are very difficult to retract once they're put in place. So you're winning a lot of friends when you put these programs in place, but you have to be able to really afford them in the long run. we need to be able to do that. So as I said, I don't think it's a situation that it's not all doom and gloom, but I think it's, potentially this is a sign that we perhaps need to look at the path that we're going on in certain of the policy areas.
So in terms just of the total level of borrowing, you also want to see the composition changing. We've got a very interesting story developing with Mark Shuttleworth taking the government in general to the courts today. It's a process I think that's been underway for some time. But he's making
Everybody's taking the government to court. So are the Free Market Foundation on labour policy. I just thought I'd throw that in.
So the government's going to be spending a lot of money on legal teams at the moment. But I wanted to get your take. If by some magic switch we could abolish exchange control tomorrow, JP, what do you think would happen to the rand? Do you think South Africans would be running for the doors?
I think it'd be difficult to judge what would happen on the very next day, but I think in general, you end up with this kind of prisoner's dilemma of if you sort of trapped, that you automatically want to get out. And I think that we're pushing pretty hard for those controls to be relaxed. I mean, you've got very successful domestic companies here that would like to go and compete on a global scale, and it's very difficult for us to do that. And I think we need to have the ability to go and look and deploy capital elsewhere in order to take the success that we've had in South Africa. I don't think we should be scared of South African companies going and being successful elsewhere in the world. It can only be good for South Africa.